Hey everyone, I'm Paul Moore with Bigger Pockets and Wellings Capital, and I'm so excited to be here with you today. It is a beautiful Saturday morning, 11 a.m. Eastern Time, and today we're going to talk about Crisis Investing 101 again. And I'm going to be reviewing the top U.S. housing markets most vulnerable to the coronavirus. So if you live in the U.S., in a county or a city, you may want to tune in to see if your city or county makes the list. So I'm joined by Nikki Frick, our social media director, an amazing producer with Bigger Pockets. Thank you so much. Hey, I'd love to hear where you're from. So chime in, tell me where you're from, where you live, what you're up to. And if you could save your questions till a little bit later, that'd be great. What I'm going to do today is I'm going to review a brief, this article from Atom, Attom, and also from Bryan Davis with Bigger Pockets and Spark Rentals. And then we're going to talk a little bit. We'll spend the last 40 minutes or so doing Q&A. So hopefully that is okay with you. I want to mention before I go any further, also that the end of April is the last time you can get this $10 special on any audio or digital book in the bookstore. So if you want to get it for $10, you've got about 5 days left. So go to thebiggerpockets.com/store to get that. But today is also another important day. It's the last day that you can get the first copy of the Bigger Pockets magazine. I mean, the first issue. So if you want to use, if you want to get 20% off on that, you can use the code magazine in all caps, I guess, at biggerpockets.com/store for 20% off your year-long subscription to Bigger Pockets Wealth. Now, go ahead and go if you see this recording later and you're sorry you missed that 20% off, because you can still get the next issue. And in the next issue, I'm not sure of this, I think I'm going to be putting an article in there about self-storage. I've written a book on self-storage and another one on apartment investing, and Bigger Pockets is publishing the new one on self-storage. So let's jump into our topic today, and then we will take some questions and look forward to talking with all you. Hey, Alfonso Wright. Hey, Matthew. Carlitos Rodriguez. Hey, Masa Mason. Good morning, Matt. Good morning, Christina. Hey, everybody. So glad you're here. So we're going to, hey, Tou Fang from St. Paul, my friend. Okay, so today we're going to talk about Crisis Investing 101. I'm going to review the U.S. housing markets most vulnerable to the coronavirus impact. So Atom, Attom, did a study, and I thought this was so funny. Did you guys like this last week? So look at the relative importance of everything so far this year. Coffee is stable, cars on the way down, shavings down. Looks like alcohol's up for some. Toilet paper is way up, and then it's kind of handled, kind of leveled off, and sweatpants are on a continual rise. So love it. So remember, Warren Buffett says only when the tide goes out do you discover who has been skinny dipping. And so, my friends, I think the tide just got sucked out from under us very, very quickly. Who would have ever expected that a bat or something that somebody ate or something from a lab in a little tiny corner of the world would impact us all this much? Who would have expected the empty beaches, the empty cities, the empty movie theaters, and who knows what the impact will be? Before we go on, I also wanted to check our Fear and Greed Index for the week. For those of you who were not here before, the Fear and Greed Index tells us what emotions are driving the market. Look at this, January 17th, it was at an almost all-time high of 89% extreme greed, which means extreme optimism about buying stocks, bonds, real estate, etc. But March 6th, it was 6. Look at that drop, 89 down to 6. Last week when we were on the show, it was up to 44 Who would have guessed it would have gone up to 44 so quickly? And 1 week later, it's down to 39. So just wanted to check in on that this week again. So this is a study by Attom, A-T-T-O-M. It's called U.S. Housing Markets Vulnerable to Coronavirus Impact, clustered in Northeast and Florida. And so I look in bigger pockets because there's going to be an article coming out about this exact topic. And that will be by Andrew Sirios, my friend. You can also look at Bryan Davis's article. Bryan Davis is a Bigger Pockets blogger. And he's got this article, which U.S. housing markets will be most affected by COVID-19. Highly recommend this article. And you can Google that with Bryan Davis's name next to it to find this article. Now, Bryan does a great job summarizing the Attom, A-T-T-O-M, research. And I love this article because he does a great job explaining the pros and cons of the article. And we're going to jump into that right now. So this, get your glasses on and take a look. Here's a map that Bryan Davis, Bigger Pockets, Bryan Davis created. The darkest areas are like the 1 through 99. They're the 99 highest ranked cities that should be vulnerable to the coronavirus impact. These are counties, actually, excuse me. Look at the Northeast. Look at New Jersey. Look at New York. Look at Florida. And then look some spots around Chicago, Ohio, Delaware, North Carolina has some. Now, don't look at just all colors because the light colors, the light tan, are actually the best counties, the very lowest risk. And by the way, a whole lot of those, 10 of the 50 lowest, are in the great state of Texas. And it looks like a lot of them are in Colorado as well. A lot of the low risk areas are also up in Washington and Oregon. Look, none of the Washington, Oregon, Idaho, Montana, Wyoming. Now, Wyoming has all gray. By the way, gray means that those counties weren't ranked. Either they had a low population or they didn't have enough data to rank those counties. Hawaii's not looking too good, but there's going to be some weaknesses in the study, and we're going to get into that. So before we do, let's zoom in on a few areas. New Jersey, 14 of their 21 counties are on this list in the top 50. So 14 of the 21 counties. Looks like Northeast Pennsylvania, where Mike C is from, has some of those as well. We've got some in Delaware, some in Maryland. Now look at Florida. A lot of counties, I think 10 counties in Florida, are among the worst. So very significant situation there. The county, Lake County next to Orlando is one of these. I'm probably going to say it wrong. Osceola County. A lot of counties in Florida as well are highly at risk. You've got these counties around Chicago, Peoria, although I don't know that it's in the very top here. Peoria is significantly at risk as well. In California, the only very top risk county is Shasta County, where Redding, California is. My daughter's in Redding, California. She's part of Bethel out there. And then I've got another county in Arizona that is in the top counties, the worst. But most of the West, most of the Midwest, most of the South is not doing too badly. So this is the map again. And if you want to actually get this article by our friend Bryan Davis, you can get that at sparkrental.com/yada, yada, yada. You can read that yourself. So I want to go over the data in a little more detail. I'll leave this screen up while I do that. First of all, this data is based on foreclosure rates before the coronavirus started. So the foreclosure rates in the last quarter of 2019, which are a precursor to what the foreclosure rates might be in the future. Second, they analyze the number of homes underwater, and that would be homes where the loan to value ratio is above 100. So in other words, the house might be worth 100,000, but the loan is 102,000. Those are obviously at a lot of risk. Third, Atom looked at affordability, and that means they compared the median local wages to median local home values. And I really would have thought California would have had some more of those, but apparently California, a lot of the areas in California are doing medium and some are doing well. Now, Brian Davis, Bigger Pockets and Spark Rentals, Brian Davis says that there are some weaknesses in the study. And he said, first of all, not all industries have been hit evenly by coronavirus. Places I would think like Las Vegas have a lot of travel, tourism, hotels. They might have got hit more severely. Other places that have a lot of warehousing and healthcare, IT, they might do relatively well through this. And that wasn't taken into account. A second thing that wasn't taken into account is population density. Places like New York, Chicago, they have a much greater likelihood of transmission of the disease. And so they might not have taken that into account. Another factor Brian brings up is there's evictions. There's tenant-friendly jurisdictions that have suspended evictions, and that's not accounted for in the study. Keep in mind, my real estate investing friends, that the landlord's mortgages are not necessarily, usually not covered by the same rules that the tenants are. So you may have a situation where a tenant is thumbing their nose at their landlord and saying, we don't need to pay, but the landlord still has to pay their mortgage. And it really seems to me that is going to be a big problem that's going to have to be faced. I think lawyers, by the way, are going to do really well in the coming decade. What do you think? I don't know. So there's going to be a lot of opportunities to find motivated sellers and get great deals on investment properties in the coming years. Brian says in the coming months. It could be the coming months, but for sure in the next couple of years. The problem is it's going to be harder to find buyers. And I think it's going to be easier to find tenants than it is buyers in the coming years. So think about that in your strategy. Expect to see higher deal flow, or at least on the selling side, but also higher risk in getting financing. If you haven't read Howard Marks' book, Mastering the Market Cycle, I highly recommend that you get that book, because he says that the lending cycle goes in concert with the fear and greed cycle, and it's going to be hard to find loans. Now, a very good friend of mine is actually getting a loan to do flipping right now, and he's having no problem getting that. Places like Lending Home and Fund and Grow continue to operate normally at this time. So whatever you do, like Brian says, stay safe, stay liquid, keep cash on hand, and be ready for potentially the greatest buying opportunities of your life, because I really do think that is likely going to be the case in the coming months. And if it's like 2008, which it might not be, we're talking about maybe even in the coming years. 2008, the residential didn't hit bottom for about 2 to 2.5 years. Commercial real estate didn't hit bottom for 2.5 to 3.5 years. Now, they were on the way down from from actually 2008 on, but they didn't hit bottom till 11 or 12. And so the great thing about real estate compared to stocks is this: you can go to lunch or you can take a nap and lose 10% of your portfolio in stocks. In real estate, everything takes a much longer time. You have time to plan. You have time to assemble your team. You have time to get your tribe together. You have time to start writing blog posts and doing videos and creating content. This, if you haven't started already, this would be a great time, especially if you're quarantined or slowed down at work right now. And so thanks for humoring me on this. I would love to jump into Q&A. So Nikki, what do you think? Do we have some questions out there? I see one from Murray Clark. What parts of the property sector do you think will be most affected? Offices, retail? I think offices are going to have a really hard time. Hey, Murray, great to see you. I think offices are going to have a hard time. Some retail like malls are going to have a really hard time. Murray says, I can't see offices bouncing back. I think one thing that could happen is people could realize that they can operate from home and they can have a virtual workforce. So I think there's going to be a likelihood, unless there's a very swift economic boom, a likelihood of offices having a lot of trouble in the near future. Warehouses are going to do really well. Data centers should do really well. There's some issues with data centers, but I think they'll do very well in general. Senior living has taken a huge hit. Sorry about thanks. I said it wrong again. Nikki, what am I going to do? Because of the tragedy in Kirkland, Washington. But a lot of other senior living, like skilled nursing facilities, non-assisted living, some other places, I think that's just going to be a very temporary thing as people recover from that. Self-storage and mobile home parks right now are doing really well, and they're predicted to do even better. I'm hearing about mobile home park owners getting multiple calls a day for people trying to quickly line up inexpensive housing. And so I think we're going to see those bounce back. Multifamily we're still a little unsure. I wrote a book called The Perfect Investment, but it's not always perfect, I have to admit. And so we'll see how that goes. So while Nikki finds us the next question, I'll just say, stay safe, stay calm, get your training, get ready. There's lots of great things you can do. There's a great unique commercial real estate strategy that's about to unfold using debt in the area of private lending or buying secured notes. And there's also a great strategy. There's many great strategies in the residential realm, including using lease option sandwiches, subject to mortgages, things like that. So Matthew Paul, hey Matthew, I'm just starting out as a real estate investor. What advice do you have for newbies with no experience? If you're a newbie with no experience and little money, you didn't say that, but I assume that many of you might be in that situation. I don't get paid for doing this, but I'm going to recommend that you check out Chris Prefontaine's book. It's not easy to find. It's not on Amazon, I don't think. I think you have to go to his website. Now, Chris Prefontaine is one of our writers at Bigger Pockets, and he's got a book I just finished called Realestate on Your Terms. And he's also got a training program, a mentoring group. Chris Prefontaine, Zachary Beach have both been on my podcast, and they've got a great strategy. And it's actually a family of strategies to buy residential real estate. And there really is a way to buy it with very little money down without going and getting a mortgage. Lease option sandwiches is one. Assigning out is another. Doing subject to mortgages is another. Doing a wraparound mortgage is another. There are ways to actually secure distressed property and then provide it to the people who need it. So you're helping yourself, you're helping the bank not get the property back, you're helping the seller make a sale when he couldn't otherwise, and you're helping the buyer, the tenant buyer who wants to find a lease to own, and you're providing it. Literally, you're providing a great service to society. Friends, we're here on earth to help one another, to love and serve one another. Making a profit is a great byproduct of that. So, Nikki, you can get me another question. And I would say, Matthew Paul, that is a great way to go. There are 7 paths to get involved in commercial real estate and other types of real estate. And we could go over that later if somebody asks. But I will say that one of them is certainly getting mentoring and coaching, and it's a great time to do it. Murray Clark says, what do you believe co-working spaces might then find an uptick? Murray, I never thought of that, but it makes sense. There's full-blown office where you own an office building. Then below that, there's rental office space in an office building. And then way below that is working from home. But in the middle is this co-working spaces, and it really does make sense. And I've been kind of knocking it for a while. I love WeWork spaces, by the way. But I really think that might make sense as people trickle down that from full-blown office to home, that co-working spaces might make a comeback. They had an inglorious fall from grace last year, but that really does make sense. So thank you, Murray. Okay, so where are you from, Murray? We got Robert Chang. He says, do you think the economy will take longer to recover as companies use this time to let go of higher paid employees and rehire slowly? Robert, you guys are amazing. So I'm amazed that I get to do this and be here with you on Fridays or Saturdays. And I'm amazed to have a wonderful producer, Nikki. But you guys have great questions. You're making me think of things I hadn't thought of. So please keep them coming. Robert, that makes a lot of sense. So first of all, they're going to find out they didn't need certain employees. I heard a guy the other day who said he had to lay off 10 or 20 employees, and he's realizing he can run much more efficiently in this emergency mode. That makes a lot of sense, Robert, and that's going to cause a real problem for the economy as a whole. By the way, it might mean that you can find a great partner or employee when somebody who was otherwise employed and wasn't willing to make the break might be given the left foot of fellowship, as they call it, and they might be suddenly available. So I really do think that is a great point, Robert. Another one I hadn't thought of. The source of the Fear and Greed Index, Aaron, is Cape Town, South Africa. That's great, Murray. So the source of the Fear and Greed Index, it's actually published on, I believe it's CNN. I could switch, but I don't want to leave the screen. But you can just Google it, Aaron Marshall. Thanks for joining us, Aaron Marshall. Where are you from? All right. So Bryan James says, do you think house hacking could be a good strategy at this time, trying to stay somewhat conservative? Yeah, Brian, I think that it's likely that if you can just hold off a little while, you're going to be able to get much, much better deals. I mean, as far as getting a duplex, living in one side and renting out the other, or you can do the same with a 3 or 4-plex. I think your opportunity to cover your mortgage will be much better 6 to 12 months from now than right now. Of course, I don't have a crystal ball. Even Warren Buffett and Ray Dalio, Howard Marks, Charlie Munger, they say they don't have crystal balls either. We don't know what's going to happen. But if you look at last week's episode, I went over 4 possibilities for the recession, either a V-shaped cycle, which is what we hope. It goes quickly down and quickly back up. A U-shape, which is a bathtub where you slide into the recession and you have a bunch of bumps and rocks along the bottom. Then you slide out later. You have a W-shape, which is actually quite likely. The coronavirus shutdown, then euphoria when things open up again, and then another drop, and then back up later. That's a W-shaped. And then the dreaded L-shaped, which is like Japan, way down, and then just a long, slow drag back to the top. So do I think house hacking could be a good strategy? Absolutely. I would wait if you are willing. Save up your cash, learn how to do lease option sandwiches and subject to mortgages. That's a great way to get a house to house hack without getting a mortgage. It's an awesome strategy. I've done it myself many times, or I wouldn't be advertising it. So what else do we have, Nikki? So excited to have Nikki flashing questions here. Murray Clark from South Africa says, with both retail and offices coming under pressure, do you believe there might be an opportunity for conversions to residential or mixed use? Yeah, I've got a friend, the most brilliant Chad Corbett, Bigger Pockets friend, who's actually considering converting malls to senior living. Who would have thought of that? But yeah, there's all kinds of conversion opportunities coming up, and I don't know what form they'll take, but some of the wealthiest people who are on the future wealthiest people who are on here right now are those who are thinking outside the box and who are going to think about that. Developers take a lot of risks. They put their neck on the line. Some of them make a fortune, like Sam Zell, who made billions in real estate. And then some of them are now delivering pizzas. So if you're young and you have the risk tolerance for it, I don't, although I am young, you should take a look at some of those great opportunities. All right. So Dan Miley 559. Hey Dan, how do you anticipate the reduced offerings of jumbo loans and banks pulling their jumbo loan program affecting real estate in the Bay Area? So the Bay Area is done. Somebody told me the other day from the Bay Area that they're not even having worse. It's like a normal flu season for them. I shouldn't have said that because I don't have the facts to back that up. But they're actually overall doing better than most areas. You can look back at my map. I could pull up the California page of the map here, I guess. And I'll let you be the judge. Yes, you can see in the California page that generally the Bay Area was in the lesser affected counties. But the question is, what about the jumbo loan program? And that's a great question. I think that's a big deal. Yeah, if the jumbo loans are pulled, then I wonder if other banks will start backing off on their jumbo or their large loan programs as well. I would think the answer to that, Dan, would be go to local banks. Silicon Valley banks would be the best place to go for that. There's a great bank that caters to high-end people and investors in the Silicon Valley area. And I think it's got Republic in the name, First Republic or something. But anyway, just check out some local banks. And that's going to be my advice over and over, by the way, to continue checking out local banks. Steve Grider says, I'm a newbie, but very interested in senior co-housing. Is this too big for me to start out with? Should I start slower with single family rentals? You know, Steve, it depends what you're doing. You know, are you going to obsessively focus on this? Because anything new you get into, if you're not going to be able to obsessively focus, meaning give it your full-time effort, then I would start on the little lower side. Or if you have a great mentor, that would be another factor that will allow you to jump up. I jumped up to large-scale multifamily, self-storage, and mobile home parks because I had great mentors. And now I've written books on those, but a lot of what I learned for the books came from the mentors, not from experience. So that is something I'm just being really open with and admitting that a lot of what's in those books, I didn't have to slog through. So one of the ways is getting a mentor, an unpaid mentor, which would be somebody who would basically bring you under their wing and you do work for them and they teach you, or a paid mentor, which would be like a paid coach. So that would be a big factor, Steve. I wish we could actually have a conversation about this because I would like to know more about what you're interested in. I don't necessarily know about senior co-housing unless that's getting a large residential house and putting various seniors in it. And I think that does make sense. So Dana, Anthony Ravallo on a related note says, do you see a trend of people seeking out larger 4-bedroom homes instead of a typical 3-2 to have a home office built in? Yeah, Dana, so my wife and I were talking about building. My son has 1,100 acres scattered around Southwest Virginia, and we were talking about building a home, one of those. And I said, that's absolutely a must to have a home office. It's honestly, people are scrambling to make one of their bedrooms into a home office right now. And we see this if you're on Zoom calls with your company or in different places, you will see that happening right now. So Jamal Curtis says, hey, do you think we will see hyperinflation with all this money being printed? Yeah, Jamal, thank you for joining us. And I think it's very likely. On one hand, I actually wrote a fairly well-known article called Ignore This Advice. That sounds so arrogant. Ignore this advice, or I guarantee you will become a billionaire who can't afford a cup of coffee. And I wrote that in 2011, thinking that was what's going to happen then. Jamal, I will say one thing as an exception. If the U.S. continues to be the standard currency for the world, as long as we continue to be the standard currency, I think it's pretty likely that they'll be able to avoid hyperinflation. But other than that, or if we go to a world currency, they say, Winston Churchill says, never miss the opportunity provided by a crisis. Never waste a good crisis. And so it's possible the U.S. will not be the standard reserve currency in the world anymore. And if that happens, I think hyperinflation is very likely. All right. So JT, welcome JT. Are you on a boat? He says, I have a rental unit about to be available. Do you think we should increase rents as we usually would? It's slightly under market value, or keep it at its current rental price. JT, I would do a thorough analysis using Neighborhood Scout. If you're not a pro or a premium member of Bigger Pockets, you should be, because that's where you're going to get a great discount on things like Neighborhood Scout. But I would use that tool and other tools to really check the neighborhood. That doesn't help you check rents. Really shop around, really call around, and even ask some other landlords, are you planning on increasing or decreasing rent right now? I would try, if you could, to get auto pay. It's also called ACH, Automatic Clearinghouse is what that stands for. And if you can get auto pay, or use someone like Brian Davis, Spark Rentals. Thanks again, Brian, for that great map. To do automatic payment, that would be, I would say this. Look, maybe you say, hey, look, the rent is X, but I'll give you, in other words, okay, so let's say you want to rent it for $1,000 a month. Say the rent is $1,050, but if you will let me do auto pay, I'll drop it back to $999, something like that. So I think it'll be worth it for you, especially in the environment we're going into. It doesn't mean you'll get paid, but it makes it far more likely. The stats prove it. I've used it myself for years, and I love it. I want to get to Mark Cirelli's question after this one. Lindsay Uecki from Idaho says, I like your suggesting for finding a mentor. Any advice on how to find a mentor? I've looked on social media, but it's hard to understand who's actually successful and who's good at social media. That's funny, Lindsay. I like that. So, So Lindsay, if you can come back and if we can find your follow-up question, I'm going to ask you if you can tell me what arena, and I'll actually try to recommend somebody. But if you want to get an unpaid mentor, it's best to find them local or regionally. The fact that you're in Idaho tells me might be harder than if you were in a more populous area. But anyway, let me know what you're interested in doing, and I'll see if I can recommend somebody. I won't necessarily be able to. If you want to try to find a coach, Bigger Pockets, I would ask, why don't you post that question on Bigger Pockets, Lindsay, and make it really open-ended? I think you'll get a lot of responses. I will tell you right now, I have a lot of favorite mentors and some I've used, so I'll try to get back to your question. Someone says, I use Cozy for auto pay. JT says that. Thank you, JT. And yes, Cozy is definitely an option as well. Okay. So Nikki, what do we have here? So Mark Cirelli. Hey, Mark, do you see a major real estate correction in South Florida? Absolutely. I think it's almost impossible that it won't have it. I'm going to pull up this map of South Florida, or Florida again. South Florida doesn't look as bad as I thought it would. Fort Lauderdale there, if you look on the lower right, is worse than Miami. And it's one of the high risk counties. So I think that that's likely. But yeah, I think it's inevitable. If I could pull up, I don't have it right in front of me, but a chart of Florida real estate prices in, I would say, every recession. They go crazy in good times and they drop crazy in bad times. South Florida and Florida in general is one of the greatest places to become wealthy in America because of that. Mark, don't look at it as bad news. I mean, depending on what you own now or what you want to buy, but look at it as the opportunity of a lifetime. And I hope you all see it that way. I'm planning on going straight to Florida when this thing gets down toward the bottom and trying to buy a beachfront condo, maybe using a rent to own or lease to own, lease option strategy, something like that. So, or from a bank. And so thank you. Great questions. I am not getting to 9 or 9.5 out of every 10 questions, and I apologize for that. Feel free to copy and paste an earlier question back in, and maybe Nikki and I will be able to find it. So Michael Lutz says, I'm under contract to purchase a townhouse in LA. It's about average cash flow neutral, and I'm wondering if I should wait for better opportunities. So, Michael, I'm always a fan. Thank you for joining us. I'm always a fan of keeping your word, keeping your promises. I go to great lengths to keep my word, even when it hurts. And you will be honored in life for doing that. If you can easily get out of it, just to be super blunt with you, if you can easily get out and the seller doesn't really care, or if you have something in the contract that allows you to get out of it, I don't want to discourage you. But if you were my son, I would tell you to consider trying to get out, because I really do think things are not going to go well in the near term, and you might wish that you didn't. Now, I don't actually know what you're planning to do. Are you? Yeah, you're planning to rent it out. It may be fine. It may be fine. I don't want to discourage you, Michael. So, all right. So, Tou Fang says, what do you think about the amount of commercial loans outstanding? There's a huge amount. I just read right before this podcast, there's a record amount of commercial debt. Not in every arena, not in like in energy sector, there's a low amount of commercial debt right now. But could these loans cause a real estate market crash similar to 2008? Yeah. Dave Steck, Stech, check him out. He's got a company called Access. He tracks a lot of this stuff. He speaks sometimes at Harvard and the annual HSA conference. I think it's HSA. That's a hotel consulting firm, hospitality firm. He said that the record amount of debt right now is going to cause a potential big problem in the market. And I'm telling you, folks, as sure as I'm sitting here, it's going to give you, if you're positioned right, the opportunity of a lifetime to pick up distressed debt. If you can make friends with your local bankers, I already made a couple calls, and local and regional bankers, and try to be on their list to sell their distressed debt to before things hit the fan and they have to foreclose. It's a great opportunity. And if anybody asks me, I could do the math. But yeah, I think so. Would love to hear your thoughts back on that as well. Steve Grider says, do you know a good book on senior co-housing or any podcasts on it? Steve, if you find one, please email me at paul@wellingscapital.com, because I don't know of any. And I actually don't know of any podcasts either. Now, I haven't done a detailed search, but I have looked a little, and I'm really interested in that arena. And I think that it would be a great book to write. And I think that it would be a great one to look into if you know about that area. What else do we have there, Nikki? Dan Miley says, do you recommend out-of-state investing to take advantage of these markets? Yes, I absolutely do. I'd recommend going to the best market, even if you have to travel a little bit. Like I said, I'm 3 or 4 states away from Florida, but I'm planning to head there when the time's right to try to find a deal. And I think that it's a great consideration. If you haven't read it, I would read David Green's book on Bigger Pockets. Hey, did I mention all audio and digital products are 10% or $10 right now through the end of the month? You can get David Green's book on out-of-state investing and also listen to his podcast on that same topic. I'd also recommend Brian Burke's new book on the hands-off investor. It just hit the shelves about 10 days ago. I'd highly recommend that. I'm looking forward to reading that Bigger Pockets book as well. So Jamal says, that's brilliant. Thank you. I don't know what was brilliant. Matthew Paul says, how do you find distressed properties without having access to the MLS? Of course, you can use MLS substitutes. You're going to look for properties who've been on the market a very long time. You can use, write this down, a company called All the Leads. They provide distressed leads and probate leads and all kinds of things. All the Leads is run by Bigger Pockets guy Chad Corbett and his friends down there on the east coast of Florida, on the Space Coast. and they have an amazing program. You can also look in the newspaper 3 to 3.5 weeks before anything hits the courthouse steps. It should be in the newspaper. For me, Roanoke, Virginia, all I have to do is set up an automatic search and look for a few keywords. Like it's not really called a foreclosure in Virginia. It's called a trustee sale. So if you're in a state like that, you just put in trustee and look for that. If you're in a foreclosure state, look for the word foreclosure. You can figure it out. Just go buy a newspaper. Do you guys know what a newspaper is, by the way? I don't have any around here. I have a printout of the Wall Street Journal, but I didn't buy it. I have this wonderful article on this 4,100% stock that went up. But anyway, seriously, get a newspaper and then get online at the newspaper site and start looking for foreclosure sales, courthouse steps, and you can actually go reach these people before they get to the courthouse steps. Sometimes make a deal with them. I've done it a number of times myself in the early 2000s. And so that's what I would recommend. S says, how do you think lower priced homes in suburbs will be more? Nope. Do you think lower priced homes in suburbs will be more valuable because people are spread out versus densely packed cities that went up astronomically in the last few years? People have a short memory. Now, if this Corona thing is the beginning of the rest of our life, if that stuff like this keeps repeating, then I think that that's pretty likely. I mean, I live in a neighborhood. I'm looking at a lake right now, but I have a house 10 yards from my house, maybe 15 or 20. I'm thinking about moving back out to the country. I think that people are going to be thinking that way for a while. But if this thing passes and it's over, I don't think it's going to be a huge movement. That's just my opinion. I don't know what you all think. I'd love to hear from you. Hector says, I'd like to start investing in small multifamily from 8 to 50 units. Any source where I can learn how to invest on small multifamily? Yeah, so my book about multifamily would not be a great book for you, Hector. It'd be okay, but I'd recommend Steve Burgess, Berges, The Complete Guide to Buying and Selling Apartment Buildings. Brandon Turner and I talked about this book, and he really likes this book as well. So I'd highly recommend it. It's got a really cool pair of charts in it that will blow your mind. One chart shows what happens if you buy, fix, sell, versus you BRRRR, which would be buy, fix, refinance, hold, and move on to the next one. This chart showed that over 20 or 30 years under the BRRRR method, which I love, you would be able to, with these certain assumptions, be able to have a portfolio of like $3 million, which is a respectable sum. The other one, which was buy, fix, flip, and then do it again at a larger, then larger, then larger, showed that instead of 3 million, you'd be at 91 million. What? Well, it's just math. The problem with Steve's math is he shows him doing those larger and larger, 100, 500 unit apartment buildings every year. That's next to impossible. I'd say it's impossible. So, but I think the point is still really good. So consider that. That's what I would recommend for a book. There's podcasts galore on apartment investing. Michael Blanc, Bigger Pockets fame, and the guy who got me into Bigger Pockets, my friend in Northern Virginia, actually has great books, podcasts, and other information on buying small multifamily in the 8 to 50 unit range. I would highly recommend. If you all are looking for a mentor, by the way, paid coach, since he's on Bigger Pockets, I can honestly say that he is one of the best. He's got all kinds of great stuff. I talked to Michael Thursday, and he's actually launching a platform thing, teaching people to build a syndication platform for whatever you're involved in. So we're getting down to the last 15 minutes. So Nikki is going to flash up some of the best questions, or at least the most current questions. And I will answer as many as I can. I want to warn you, I'm going to go fast. I always say that, but I don't do it that well. I must be kind of long-winded. Adam Zat says, what do you think of Little Rock, Arkansas's housing market? I was planning to get into single-family rentals with about 1.5% rent-to-value ratio. I actually don't know about Little Rock's current market. A friend of mine named John Cohen, I believe, has invested there. Check Neighborhood Scout. Get a subscription to Neighborhood Scout. Also check the net population migration. Make sure it's above 1%, that people are moving into the area more than an average area. I would say that those are some things I'd check. I'd check rental rates. I'd check inflation. I would check the diversity of the economy, things like that. But like I said, I had heard Little Rock about 6 years ago was not a great spot, but that was 2014. So Adam had a question. I might have missed it. Okay. Kev Roop says, hey, Paul, on mobile home park investing, how do you feel about investing in parks that have a low number of pads, but have the zoning and space to build more? If it really has the zoning, I mean, you've checked with the county commissioner or whoever, and you're really sure you can build more without any significant pushback from the neighborhood or anybody else, which is really hard to get, Kev. I would say that that's a good strategy, especially if you're willing to go out to people like 21st Mortgage and also some Section 8 type providers to try to bring in more homes, put them on the lot, and then sell them. That would be, it's a hard business, Kevin. I mean, mobile home park investing is awesome. It's one of my favorite things to do, but it's really hard to build new pads and fill them up. But it is possible, especially if you have a source for used mobile homes. So Matthew Paul says, is Alabama a good state to start investing? I'm located in Atlanta. The properties are too much for me to start my new venture. Matthew, I tried to buy distressed large apartment buildings in Alabama, and I couldn't actually find any cities that had great net population migration and great economies. Mobile, I really looked hard at. I didn't think it was a great deal, except for Huntsville. Huntsville has about 800 to 850,000 people, if I'm not mistaken, and it is a great market. So that's where I would look. I wouldn't ignore the fundamentals, Matthew. I'd look at that. Malsa says, as a new realtor, where would you suggest I look for investor clients? Do the best you can, Malsa, on Bigger Pockets to learn all you can about your area, to try to connect with people in your area. Also look for the local Real Estate Investor Association. That's where I would start. Someone says, I lost my job and have no savings. I'm looking to raise capital from friends and family to start BRRR. Would you recommend the strategy? Will I find it hard to refinance with no source of income? Yes, it's hard. No, I wouldn't recommend it. And it will be hard to refinance with no source of income. Now, if you are going to refinance, go to a small local bank or credit union. Here's why I say I wouldn't recommend it. If it was your only option, I absolutely would recommend it, Commodish. But I think there's such a better option out there. And that is, go check out Chris Prefontaine's articles on Bigger Pockets and check out his book, Real Estate on Your Terms. He's got such an easier path. Considering the situation you're in, I would definitely check that out. And if you're new, check out Chris Prefontaine's book, Real Estate on Your Terms. I think you have to go to his website to get it. And I don't actually have that website in front of me, although I did just finish reading the book. All right, so what's next? Can you please say the name again of the mentor you mentioned? Centhia, thanks for asking. Michael Blank, B-L-A-N-K, is one great mentor that I mentioned, and he's a Bigger Pockets favorite. Thank you for flashing that on the screen. Nikki, Stephanie says, come on over to Alabama. Alan said that, actually. Stephanie said, what do you think about Scottsdale, Arizona? Scottsdale's a great place to get wealthy in the next several years. Why? Because Scottsdale, along with Phoenix and other areas, I'm pushing the map up again, Nikki, has some great ups and downs. The sand states of Nevada, Arizona, California, and Florida have amazing ups and downs. And if you can invest in those areas when times are bad, you've got a great chance to see a huge rise in property value. If you invest when everybody else is, when things are great and people are jumping out of helicopters at their events with tens of thousands of screaming fans, that actually happened last fall, then that's probably not a time to invest in the Sand States. It's a time to get crushed. So I guess I'm being a little blunt today. You're welcome, Cynthia. Okay. So who else has got a question? Let's see. Jonathan Cho. Hey, Jonathan, if distributed remote work group grows in popularity, do you think cities supported by technology companies like Austin and are going to be at risk of home value stagnation? I would say that, I don't know. I think that people might be going there as well, which might offset the people leaving. People might still be, there's still, the way I see it in the Silicon Valley area, for example, you got people generally working in the region of their office, even if they're working from home. However, you make a point, people can also live in the Blue Ridge Mountains like I do and work at their company, and it could cause some issues. I think time will tell. Sorry, I just wimped out on that question. So hopefully Nikki can quickly find me another one so I can move on. Sorry, I just don't know. Matthew Paul says, do you recommend buying properties with credit cards? If so, how to liquidate the cards? I don't actually understand the second half of your question about liquidating the card, but there are programs where you can get 12 to 18 months free, meaning no interest on your credit cards. I think you do have to make payments. And I have a friend who did that for their business. And they said, this downturn where 60% of his chiropractic business went away overnight really is going to make it very hard for him to pay back those loans. And they're going to have whopping huge interest rates when this thing at the end of their 12 to 18 month term. So be careful. I wouldn't do it, but some people would. I would recommend, buying on a lease option sandwich or lease to own. So I'm sorry, I don't know how to pronounce your name, but I'm going to guess Hicham Amus says, thank you for joining. Do you think that high-end property in such places like Manhattan and San Fran continue to be a potential target from buy and hold versus buy and sell for higher return? Okay. The cap rates, the prices are so high there. I think it's risky. I really do. So I don't know that I would take a chance on. There's so many better opportunities in nearby areas if you can get somewhere else. So what do I think about investing in real estate in Victorville, California? Thanks to Emery Brown for asking that. I don't know anything about it. What is it a suburb of, if anything? If anybody else knows, please answer Emery, because I don't. Okay, so Arshad says, how can I find if I build new mobile home park in my local area? Yeah, it's really, really hard, especially if you're in an urban area or a suburban area. And if you're in a rural area, I'm going to be real blunt with you. It's going to take years or decades to fill up a mobile home park, unless you've got some special inroad with mobile home park owners who want to go there. You're just going to have to go to your local planning and zoning commission for your local county or city. Go to the planning and zoning department. You can call them first. It's a subsidiary of the building department, I think. And you should be able to get an answer on that. It's extremely hard to get approved and maybe even harder to fill them up. So be careful. Learn all you can about mobile home park investing. And I think you'll be happy that you did. Stephen Holiday says you can buy gold with credit card and then liquidate the gold. Huh. Okay. Interesting. Okay. Thanks for sharing that. Somebody says, oops, I'm on the wrong question. So, Nikki, what do we have here? I am a 50-year-old rookie with a question. No, with one rental in the Seattle area, what data point would you use to identify out-of-state investments, and where would you get the data? Ken, I again would go back to the sand states, Nevada, Arizona, California, and Florida. And honestly, a lot of that work's been done for you. You know, Mark Twain supposedly says, history doesn't actually repeat itself, but it sure often rhymes. And I think that history is going to rhyme this time. And that would be the data point I would use. And that is places that go extremely high in good times and drop extremely low in bad times. A friend of mine in Jacksonville, Florida, the other day was saying that there was a certain condo that was, I think it was 100,000 maybe in 2001. It shot up to 180,000 in 2006 or 7. It dropped to 45,000 in 2008, 9, 10, 11, 12. And now it's back to 180,000. My friends, that is the place to get wealthy. Read Howard Marks' book, Mastering the Market Cycle, and go to those states. Okay. So Centhia Brown says, what advice do you have for the new investor that wants to use other people's money to get started? Yeah, one way to use other people's money, Centhia, is again what I mentioned earlier, and that is to do subject to or lease option sandwiches. I think that is a great way to go. And then if you want to use other people's money, be looked at as the authority, either in your market or your region or in your asset class. You can be an authority by writing blog posts, by writing a book, by creating content. You can even write a short book or an ebook, and you begin to be looked at as an authority. And then you begin to get investors coming to you to ask advice. And that's my best piece of advice I can give on today's show. Gabor, hey Gabor, how would you start in multifamily investing in the upcoming times with several $100,000 in cash in the Charlotte area? First, I love Charlotte, and I actually tried to invest in multifamily many times in the Charlotte area, and I got outbid a lot. So Gabor, my long version of the short answer, what in the world does that mean, Nikki? Is seriously, I would recommend getting a mentor, getting a partner who's already been down this road, or investing passively. And so that's my advice. You can find mentors in the Charlotte area, or you can find one nationally. And then eventually, when you're on your second or third deal, you want to become maybe the deal finder, or maybe the money-raising partner in a partnership. That's how I'd recommend it. I would definitely recommend going with somebody else, taking a smaller cut, a smaller return on investment to learn from a pro. And there's great ways to do it. It's never been a better time in history to learn from pros. So we're down to our last few minutes. And I want to remind you that today is the last day to get the first edition of the Bigger Pockets Wealth magazine. And so you're going to want to get that if you can. You can get that for 20% off just through today. You can still buy it if you watch this in the future, and you can get the second edition. I believe it's a quarterly magazine, and I'm really looking forward to the second edition of this magazine. And I'd also recommend that by the end of the month, you pick up some of these digital products. You know, the best thing you can do, folks, in a time like this is learn all you can, link up with mentors, link up with coaches, build your tribe, find somebody else who's interested in real estate investing in your area or another area, and be ready. Build your team, build your tribe, build your immunity to criticism, build your reputation, build your friendships and alliances. You know, social distancing is not physical distancing. It is, I said that wrong. Social distancing is only physical, but you can still work with people like we are today. And I am working with all of you today, with Mark and Centhia and Ken and Gabor and Ruth and Joel. I'm so glad to be with all of you and so amazed that I get to do this. So thanks, Nikki. Thanks, Bigger Pockets. Thanks to all of you. I am going to go enjoy my carrot apple juice for the day. And I really hope all of you have a wonderful weekend. I hope and pray that you are all staying safe and learning all you can, preparing for the greatest economic opportunity of your lifetime. Take care. Thanks. Have a great weekend.